Welcome to the Master Your Millions podcast, the show all about your financial potential and leaving a legacy for future generations. Here are your hosts, Jason and Scott Henderson.
Welcome back, everyone. I am your host, Scott Henderson, and my co-host is Dr. J. I'm super excited for the guest we have coming on today. He's a mentor and a friend of mine. But Jason, who do we have coming on?
Today, we're thrilled to welcome Jeff Shada, a powerhouse in business finance and a true advocate for entrepreneurs. With over 40 years of experience spanning startups to Fortune 200 giants, Jeff has mastered the art of building robust business credit without risking personal assets. As the division president at Laughlin Business Credit Advisor, he's on a mission to educate business owners on securing funding through strategic credit building. Known for his insightful webinars and compelling articles, Jeff is here to share his wealth of knowledge and help you unlock new financial opportunities for your business. Welcome to the show, Jeff.
Thank you. Thanks for having me on, guys.
We're really excited here. So, as we talk about on our podcast, it's all about building, enjoying, and passing on wealth. And the whole idea of personal credit's been bantered around, and even a little bit about business credit. Yet, right away, why is it, Jeff, that you think that someone should be building business credit?
Well, there's a myriad of reasons, but primarily to divide your assets, if you will, into personal and business. And what people don't realize oftentimes, because we're not taught in the United States about the credit piece, is when people use their personal credit inside business, you actually have crossed the threshold or potentially breach your corporate veil of whatever kind of organization that you've got set up. So that's a big one. That's probably the primary area that people need to look at.
So people have a great credit rating, however, they can have a poor business credit rating. That's correct?
Yes. And unfortunately, it's kind of traditionally, the traditional lenders out there, the banks, they don't really want us to understand as business owners that there's a different path than going through them to get lending. And their path is their risk model. It's built around, personal credit and personal, what we call PGs or personal guarantees. So most people just don't, and pretty sophisticated people don't realize that when they offer that personal guarantee, that exposes their personal net worth and their not only that, but their personal credit against their business. And bad things can happen. Later on, maybe we'll talk a little bit about, my experience and how I knew about it, but I didn't have a path around it at the time.
Well, since you bring it up, why don't you tell us a little bit about that, how you got to that point?
Oh, shoot. I dug myself into a hole. Well, so I won't say the peak of my career, but the peak of my business activity when I was working typically 16 to 18 hours a day, usually 6 days a week. I took a day off, generally Sunday to spend time with my family and church and stuff like that. But bottom line was I had two C corporations. They were both holding companies. They had staggered fiscal year ends, non-calendar staggered fiscal year ends, and there's a whole taxation method behind that. But I had an S Corp and 7 LLCs that reported into those organizations, doing about $15 to $20 million of cumulative business amongst them all. So in that scenario, this is back in late 90s, early 2000s, and the internet was just kind of coming on board. And so people learned stuff by reading books, back to the old school, right? And there were no books. And having been through a lot of trainings, and I really pushed myself individually through a lot of crazy classes. Like I'd go to continuing education classes for attorneys because I was really interested in trying to find out, okay, what do these people know that I don't know about financing? So having built at that point $1 billion plus company in mortgage banking, and we went nationwide with it, I realized that that company imploded, and it imploded because it had some problems with financing credit lines, in that case, $50 million, what was called warehouse lines. And the market went south on secondary mortgages. And anyhow, the fact is, it imploded that company. I was an owner of that company. I was not a principal, but I was in the C level for that company. So stepping back in 2008, when the market took a rough tumble, Jeff Shada and Jeff Shada's companies were okay, but the marketplace drastically eroded. And at the time, I was aware of trying to get non-recourse credit loans, which is typically what is called commercial lending, but I was not able to. I built some business credit inside those C corporations by happenstance. And I tell people at that time, without the internet and without really any intel, it was like having blinders on, or maybe even covers, walking through a dark forest at night, bouncing into trees. So during a 10-year period, I built some corporate credit, had a $300,000 American Express line directly to the EIN of one of those C Corps, and a big Chase line and yada, yada. But when I went for large project loans, so multi-million-dollar project loans, they always wanted my Jeff Shada's personal guarantee, even though it was inside a corporate environment. So the dilemma, whether it's corporate or LLC or whatever you got, when a bank asks you for your personal guarantee, they're looking at if something goes wrong with that project or something goes wrong with that business, they want to come back to you, the individual. And at the time, I was worth roughly about $20 million, net worth. The challenge was, even though in 2008, I didn't like the marketplace, I had 400,000 or 500,000 liquidity inside, various businesses, and I had perfect credit. But I had on my credit report, I was probably about a maybe mid-7 personal report, but I had about $800,000 of various credit cards, business credit cards and stuff, because I had all these companies. So each company would load my personal credit card debt and stuff on, because they were looking at who's Jeff Shada is, right? Because I was aware of non-recourse paper, but I didn't know how to get it. So I'm still utilizing that, even though I'm building business credit. The bottom line was this. One of the projects in one of the C corporations that I personally guaranteed on came up for renewal. And at that time, I was 50 years old. And for the last 30 years, the standard process, the bank would call me up. They'd get all my current paperwork. They'd look at it, and they'd tussle with me a little bit, and we'd renew the loan, right? And when I mean tussle, maybe I have to pay it down a little bit. Maybe I take a little bit interest rate hit or whatever else. In this case, we were 15 days out from this renewal, and this loan officer that I'd followed bank to bank for about 10 years, his name was Bill, I won't use his last name, calls me up. And I was driving from Denver to Colorado Springs, and I lived in Colorado Springs. The point is, I was on an 8-lane freeway, and he says, "Hey, we've got a problem. I need to talk." And I said, "Okay." I said, "I'm on the road. Go ahead. I got plenty of time. I got 45 minutes before I'm home." He goes, "We're not." I said, "Okay, what do we need to do?" That was my first thing. So what do we need to do? It was just, I'm a problem solver, right? I'm going to solve the problem. And he said, he goes, "No, we got a bigger problem than that. We're not renewing the loan." And I said, "What do you mean not renewing the loan?" I said, "Well, what are we going to have to do?" I said, "Do we have to pay it down or whatever?" And he goes, "No, it's worse than that." He says, "We're not renewing the loan, and we're calling the loan due." And this is 15 days. I got $1.6 million loan against a couple $1 million project, and we got $700,000 invested in the project, right? So the point of talking about this particular story, because I had a personal guarantee inside a corporation, a corporate loan, potentially they could come back for my personal assets, right? My, 7,000 square foot house on 20 acres with heated horse barns and et cetera, et cetera, et cetera, right? So now I literally pull over on this 8-lane freeway, and I'm saying, "What are you talking about? What do you mean you're calling the loan?" I said, "You married me when you gave me the project, and we put the $700,000 down. We can't get a divorce," because I said, I'm not the smartest guy on the street, but I said, I got 3 model homes, 60% complete. I said, I think that if I was you, I said, I would want me to finish those homes and get the point where one of the two of us have got something to sell. Because I said, the only solution to this right now, based on what you said, is an extension, get these model homes sold and let me sell out of them so I get you paid off. Anyhow, I'm going to compress this story. That didn't happen. I wound up ultimately consulting with the best bankruptcy attorney in Denver. He said, well, bottom line, after I paid him a $50,000 retainer fee and a bunch of other stuff at the time, he goes, if you file personal bankruptcy, the bank will lose your personal guarantee, have to negotiate with the corporation and get this deal done. And I'm going, I can't do that. I said, he goes, it's called bankruptcy protection for a reason. I said, I know. But I said, I built a $1 billion plus mortgage bank and I know what that does to the other side of credit. And so, anyhow, long and short of it, I had to wind up filing personal bankruptcy because we couldn't get any leverage against the banking partner. And anyhow, long and short, there was a thing that happened during that period of time. The government issued banks what was called TARP money. The Federal Reserve got TARP money. And effectively what TARP money did is it dealt banks the 4 aces out of the deck. And they didn't say that it was now not 52 cards. It was now 48 cards and the banks already had 4 aces. And what that told the banks, they said, hey, if you take Shada or Shada style loans back, we'll give you 80 cents on the valuation of the money that when you took the loan in, we'll give you 80 cents on the dollar back to the bank. I only borrowed 70 cents to begin with. So guess what? They had a better deal if I didn't pay it off that they could get from the government. And the money came with very little loosely strings. So the point of this is not that I made bad decisions, but I put myself in jeopardy when I signed the personal guarantee. And I needed the leverage at the time to get the project done. But the bottom line is not due to my own problems, but due to economic problems. I got cast in this thing that I couldn't get out of. It was a net that I was just stuck in, right? So that catastrophe stopped my whole world. And I literally went home that night and I told my wife, who's now my ex-wife, that we were going to play life like Monopoly. And I had 40 rental properties and I had 2 beach houses. And everything was rented out. And we literally said, I said, we now have 30 days before any of this starts hitting credit. We got to hope for a miracle. God's got to give us, $1.6 million, or I got to win the lottery or whatever else. Because I told the bank, I said, you're not touching my retirement account. That was still safe. But other than that, they could get to anything else because this personal guarantee. So long story, folks. The story is when you offer personal guarantee, things happen outside of your control. Now, if you'd asked me a year before that, would anything like that ever happen? I mean, I was literally 50 years old. I was looking at retirement after these next 3 projects in my mind, like, oh, okay, I got enough money. I can retire. I can do something else. I don't have to take all these risks, yada, yada. It changed my life. And it's no easier to rebuild the second time than it was the first time. So that's the moral of the story. Don't offer personal guarantees.
Yeah, that is the impetus for you to then turn around and say, hey, this basically blowing the whistle or saying, watch out, watch out, watch out. There is a process to build corporate credit, right? Whether you're a one-man show or one-woman show, or you have 50 employees, there is a process, and it needs to start early on, right? When you start a business. What would you say, and I'm monopolizing a little bit here, Scott, if you have questions, just jump in. But what would you say are, say, the top 3 mistakes that new entrepreneurs make that then they have to correct later or do later in order to start getting corporate credit?
So to start getting it, number one is fundamental understanding of the difference between what people title or dub, I call dubbing it as business credit versus commercial credit. That understanding needs to be mastered and understood by everybody out there. So at least you're aware when you're offering a personal guarantee. Sometimes it's just you're signing and you got, a 30-page bank document. I guarantee you, not only are they offer personal guarantee, but there's things called cross collateral authorizations in there and a bunch of other stuff that we don't have time to get into today. But when you deal with traditional banks, their risk model is such that they want to minimize their risk. They don't care how much risk they're putting you in, and people don't understand the gravity of that. Even attorneys sometimes don't understand the gravity of what that is. So, number one thing is to learn about the subject matter. The second thing, then, and the mistake that people make is building too much dependence on their personal credit and their individual FICO scores. Because quite honestly, we don't know any different. So if you solve for the first thing that I said, you'll now know a little bit different. And then the third thing would be to find a path to actually start building, putting the building block of your business credit together, because there's logic behind it. It's way beyond an art now. We've got it down to a science, and there are ways to actually achieve that in a fairly short order.
What's the best way to make it? Go ahead, Scott.
I was going to say, let's take the opposite, Jeff. Like, give us an idea. What's the timeline and what can corporate credit get us exactly?
So I use an example all the time, and I'll try to shorten my story here, but everybody knows who Walmart is. And so I'm going to use Walmart as my primary example. And what a lot of people don't know about Walmart is this. About 80%, and you can say 70 to 90, but about 80% of the stuff on Walmart shelves, they have not paid for yet. And the reason they were able to scale to the level that they are, being one of the largest organizations on earth, Jeff Bezos saw it. He did the same thing with Amazon, because a lot of private sellers come into Amazon all on their own cost. So what happens is Walmart uses what was called vendor credit. And so, Scott, if you got a contract with them and you got 1 million units to be able to deliver into Walmart, you'd be all excited, right? So the other side of your business equation is they're gonna do three things. They're gonna say, here's what we'll pay for them. Here's when you got to deliver them. And we need 121 days to pay any first invoice of these 1 million units in. So you go back and you're saying a win, win, win. You tell your crew, well, how are we going to make 1 million units not get paid for like 6 months on these units? Like, how am I going to do that? Well, that's your problem now. And if you don't have business credit, you got a problem. But if you do have business credit, you now, the vendor, can go out, you can show the contract that you've got for Walmart, and you can get business lending provided that you've demonstrated a borrow and pay back inside an EIN number. You can now scale your business with that kind of credit. Going back to the Walmart equation, the reason I use Walmart, because number one, everybody knows them. But the second part of Walmart is this. If I took your cell phone away from you and you couldn't use any maps, and I flew you to anywhere in the United States, with this little tool, our mouth, we could find the nearest Walmart. Why is that? Because everybody knows where the local Walmart is. Now think of a digital imprint and think of your individual business. If you can't create a digital imprint that's findable like Walmart out there in the ether space for EIN business credit, you're not going to get business credit. Now, you don't have to be the size of Walmart, but those 125 data points that lenders search for are all contained in what you put out there. And unfortunately, with business owners, it doesn't happen unless you physically make it happen, because it's not like the credit system that we know for a person that automatically happens. Nothing happens automatically in the business world. So anyhow, going back to, I use the Walmart example for two reasons. Number one, the authorization that the leverage that they use, other people's money, in this case, vendor credit, has helped them to grow and scale to the size that they're at. So if we use that concept in any business, whether it's, you're buying, selling wholesale inventory homes, or you're a builder, or you're, one of my other businesses that my wife runs, we're an Amazon seller. So we buy retail or wholesale stuff all the time, sell retail on Amazon. So we churn a lot of money and go through a lot of holding power, and we use business credit inside that to buy products. Anyhow, hopefully that paints a little bit more of a picture.
It does. And I think we can even take it a step further. Correct me if I'm wrong, but you get to the point where you can get 10, 20x of whatever cash you have inside your account. Is that correct?
Yes. And the cool thing about business credit is once you show a track record of this buy and pay, and that becomes imprinted on the business credit systems out there. People will come running to you with better deals, people being lenders that actually offer commercial credit. And you can start now leveraging that. And they know that if you're borrowing and paying, and it actually, the business credit reports show expect payments on or before the due date, you can get lending. And it's pretty good lending. And because they know you're a business, it's magnified dramatically against what we can get as individuals. What we can get as individuals is based on our income, and it's based on how much income we got. But in business credit lending, it's based on what you look like, what you appear like. So if you build a business report that looks like Walmart, feels like Walmart, tastes like Walmart, smells like Walmart, and appears like Walmart on a smaller scale, you become very lendable in that arena.
So with that background, I know you're working on some pretty exciting stuff right now. Give us a little bit of insight on what you're working on.
Well, that's a loaded question, man. You don't know the half of it. Well, one of the things I'm doing right now, and I was hoping to have it ready on or before our little event here. I'm working on a book that's actually fleshing all this stuff out. So that'll be coming soon. But bigger things are we working on some large projects, multi-million-dollar lending, and really helping a lot of individual businesses come to what I call a sustainable level of credit. What I mean by that is once you build business credit, it's kind of like a gym membership. You buy a program and you got to go physically do the work. And you either got to get a coach or someone else to help you to flesh all this stuff out. But once you get it fleshed out, then it's pretty easy to keep your muscles buffed up, right? So same thing in business credit. Once you got it developed, it continuously stays there, providing that you make payments as agreed and you continue to utilize accounts. And the reason I talk about that is a permanent style of lending. So going back to Scott, we've got a lot of folks to the point right now where they're actually starting to be able to use the horsepower of their lending inside their business to the tune of, tens of millions of dollars, or at least they're on the path to do that.
That's awesome.
So earlier you said the first thing to do was to educate yourself. And I was going to ask the question, how's the best do that? So you kind of hinted there that you've got a book coming out. And so when that happens, please let us know. We can maybe even update the show notes so there's a link to that.
That'd be great.
What are some other ways that you would recommend people to educate themselves about how to do that? Because I mean, one of the things well, let's just answer that question. I have another question.
Yeah, well, inside one of the reasons I built Laughlin Business Credit is because for 28 years I'd been underneath the umbrella of the Laughlin companies, and they helped me with all my details, my organizations, and the stuff that sustained and outlived my personal credit was all my organizations were set up right. They continue to live, but they couldn't be driven anymore because I lost my personal credit, right? So the economic model started falling apart, but the organizations continue to stay out there. Going back to if you pair up with someone like us that actually offers not only a step-by-step guide, but we offer a consulting package as part of that, you can get through this in about 12 to 18 months. You will be not only self-trained by yourself by having to physically do the items, but from kind of walking along with you, co-piloting, if you will, with you, or being your guidance, we're going to train you how to fish, not just give you a fish, but how to fish. And so that's really big in our circle. There's not a lot of people out there that have the level of experience that I do that do training. There's a lot of people that want to be business credit gurus, and there's a lot of mythology out there that they've utilized that some of it's right and a lot of it's incorrect. So number one, find someone legitimate to work with to understand the process. And once you understand that part of the process, then you can figure out how you want to move forward.
Jason, you said you had a follow-up question.
Yeah, I was going to say, and my follow-up question is, it sounded like when you said when it looks like and acts like and smells like Walmart, it sounds like that maybe one mistake entrepreneurs do is they put their home address as their business address. Right? That's
Yeah.
just that's a real small actionable item that our listeners could walk away from listening to this podcast and say, "Wow, in order for me to get corporate credit, right? In order for me to start to go to this next level and really building big, I have got to get a business address that is not associated with my home address."
Yeah.
Am I correct in that
Yeah.
perception?
And the reason I use the Walmart example, this will resonate with everybody that hears this message that lived through COVID. So during COVID, a lot of things went online, right? So we were in a group that we started using Walmart, and we started putting our orders online and went to Walmart and picked the stuff up, right? Now, we knew where our Walmart is, but let's just pretend like you didn't know where your store is. So whatever your store is, and someone's perception is, I'm going to order from Walmart. I'm going to come pick it up for you. So I think I'm ordering from Walmart, and I drive to this location because I'm GPS and I haven't been to your store, whatever your business is. I haven't been to your store yet, and I arrive at a residential garage door. I'm going, this doesn't look like Walmart. It doesn't feel like Walmart. It's not the Walmart experience. What's going on? Digitize that today's lending environment, and that's what lenders are looking for. So if I arrive and they'll go out and they'll what's called ping your address. If they ping your address and you're even a residential zip code or a residential area of town, they'll know that you're automatically categorized into a high risk category, and you will not get EIN business lending, or you get very small amounts of it because you're in a high risk category no matter what your business is titled, no matter what your SIC code is. If you live or you're housing your business within a residential address, it'll automatically get categorized as a big red flag.
Well, Jeff, this has been wonderful. I always have fun talking to you, and I always learn more as we talk. We're getting to the end of our time. Is there any
Okay.
last parting words of wisdom that you would leave with all of us?
I would. If I knew what I know now, back in the late '90s, and when I was really running hard, set my corporations up, I would have my own island out in Fiji next to Tony Robbins Island, and I would be having coconuts dropping on my head and not talking with you guys on this call right now. So I would highly recommend, whatever line of work that you're in or whatever business that you're in, is to get the educational piece done. So at least now you become aware, and I call it knowing that you don't know. Knowing that you don't know means you have an awareness about the subject, and gather as much information. Try to do it with someone reputable like myself, or someone that's been actually through the business grinder, if you will, that's going to shoot you the right direction.
Awesome. Thank you. Thank you again for coming on.
Guys, thanks for having me.
Guys, if you'd like to connect with Jeff, we'll put his links in the show notes down below, so make sure to check there. If you'd like to connect with Jason or I, you know where to find us, also in the show notes down below. And last, if you really like this show, leave us a 5-star review. It really helps us out and helps us a bunch with the algorithms. And before you go, remember that mastering your millions all starts with your mind and your team. Make sure they are the best. We will catch you next time.
Thanks for listening to Master Your Millions with Jason and Scott Henderson. Check the show notes for any links or contact information about today's guest. Make sure to follow the show so you don't miss any future episodes.